Welcome to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the deferred sales trust, is the best way for you to exit your highly appreciated business, real estate, or other highly appreciated asset. I'm your host, Brett Swartz. In each episode, I am joined by some of the best real estate, financial, wealth, and business minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. I'm excited about our next guest. He is the founder or co-founder of Achieve Investment Group, a multifamily investment company, and he's passionate about helping you invest passively in commercial real estate. To date, he has, with his team, over 7 years of experience in real estate and more than 5 years in multifamily acquisitions and asset management. And he has identified, underwrote, and oversaw the acquisition process of about $180 million of quality multifamily investments and 10 plus assets, and still growing. And right now, the average IRR in their portfolio is more than 20%. Please welcome to the show with me, James Kandasamy. James, how you doing?
Hey, Brett. Happy to be on your show.
Absolutely. Excited to get to know you a little bit more along the side of my listeners. James and I literally met just 5 minutes ago. And so here we go. So, James, would you give our listeners and myself a little bit more about your story and your current focus?
Sure, absolutely. So my story, I'm an electrical engineer with an MBA right now. I have a CCIM as well, which is considered the black belt in commercial real estate. Always been an engineer for 22 years on a corporate life on a W-2, and 3 to 4 years ago, I started doing this full time. But we have been doing real estate, specifically commercial real estate, for past 6 to 7 years. And we own like 2,000 units with a single GP. I mean, we are the primary GP on this deal, and we own, asset manage, and operate as well. We also have a vertically integrated company of property management, and focusing a lot in Austin and San Antonio. So we own like around 2,000 units right now, and continue to grow.
Beautiful. And by the way, if you want to learn more about James, you can go to achieveinvestmentgroup.com. So, James, let's dive right into a little bit more about your background versus just the strategy. Okay. So,
Yeah.
I believe in this life, we've all been given certain gifts and talents. Some people call them superpowers, some people give them strengths. I believe they're God given gifts, and these gifts have been given to us to be a blessing and help to others. So, I want you to go back to maybe your university days or maybe your high school days. And I want you to maybe focus and help us understand what gifts you believe you were given, and how does that help how you help others today?
Back to college days, I was always entrepreneurial. I mean, I was looking at different businesses even when I was studying, even though I didn't realize it. I mean, only recently, one of my best friend told me, James, do you remember you were trying to sell some shirts during college? And I was like, wow, really? Yeah, now I remember now, right? So always trying to do something different from everybody else, always trying to achieve a different heights from everyone else. Like even during the college days when everybody was on a summer vacation, I was spending time writing a physics workbook to sell. And this is all the workbook and solutions that I did, and I made it into a book. And after the summer holiday was over, I went and sold it in different schools, and I did make really good money. And it's just something that came with me. So I was and I tried like selling shirts, which I recently remembered that I was doing that to my colleagues and all that. So yeah, that was what happened during school days and when I was young. I think remembering that, it just makes me a bit excited, because I always had that inside my mind to be an entrepreneur, even though I spent 22 years working for a corporate company as a W-2 employee.
Excellent. Absolutely love that. So you
Mhm.
had the entrepreneur spirit, you had the spirit of selling or creating something of value that's a little bit maybe different than maybe somebody else might be doing, and spending your time doing that. And then 22 years as a W-2 employee, and now full-time general partner on over 2,000 units. Absolutely love it. So let's dive right into your investment strategy and philosophy, and how you create and preserve more wealth for your partners and family and friends.
So 3 ways that I do that. First is, of course, by working hard. I like to overwork or outwork everyone. Second is be persistent. And the third one, which is the most important, I would say, do things differently. What compared to everyone else. Like if everybody buying deals from bidding process or through brokers, we try to go a different route to buy deals, right? So yeah, being different is very important for me because right now market is super hot. It has been always hot for the past 10 years, and just buying a deal and waiting for it to appreciate, which is none of my control, is going to be very hard for me, right?
Yeah,
So I like to do things differently.
yeah, very well said. I think it's. I have a quote on my wall, and it says, "If you're not willing to risk the unusual, you'll have to settle for the ordinary." Right, and I think you're exactly right when
Absolutely, that's right.
when you say that. If you're just going to be doing the same amount of work or the same amount of due diligence or the same amount of sourcing deals just to the traditional LoopNets or CoStars or brokers, right? Perhaps you're going to get ordinary results, right? But if you're going to be willing to do the unusual and do something that's a little bit different and go against the grain, you perhaps going to find that needle in the haystack, that better value add multifamily deal. Is that a fair summary, James?
Yeah, absolutely. Let me give you some examples so that people can appreciate when I mean that, because sometimes I don't want to talk very high level and be a marketing fluff guy, right? So I mean, I would say 80% of our deal was sourced off market, right? So either direct to seller, or it comes to a broker, but we are the only person there standing, right? Sometimes people say off market broker, but there's like 10 guys and broker do off market bidding, so we try to avoid that. Definitely brokers knows that we are quick closers, we are really good buyers, we say what we do and we do what we say. They like to bring us deals which is only we can close, or only fastest closing for us. So the last deal that I did was a forbearance deal, right? Which is like not everyone does that, right? It's a harder deal, it's very difficult to get, but we put that deal under contract on 3 days. Today the broker called me, tomorrow I drove by, the next day we put it under contract. That would be the fastest under contract deal, because we know the deals very well. We are local operators. We know how to estimate rehab by just driving around, by looking at reviews, knowing the area very well. We do that very quickly. So we put the deal in 3 days, and we closed that deal in 45 days on a loan assumption, which is crazy. Loan assumption takes like 90 days usually. So we are quick closers. We buy deals which not everybody want to buy, or can buy, right? When this deal was like at 80% occupied, was negative cash flowing, not many people will be able to underwrite or have the stomach to buy that kind of deal. So these are the deals when I mentioned that be different from everyone else, right? But the amount of money we're going to make on that deal is huge, right? The potential is huge, but the amount of hard work, the amount of knowledge, the amount of operational experience you need to have is very, very unique to very few people. And that's where I said be different, right? And the third thing is, right now, right, I'm under contract on a deal which is a hotel to multifamily conversion. And not many people, I mean, people talk about it as hotel can be converted, there's a lot of rumors and all, but nobody does it, right? So we bought a hotel, we had a contract on a hotel which we're going to convert into multifamily, which is something that not everyone can do, something not, but we make huge money out of it. And this is where I protect my investors, by being different. If I want to be same like everyone else, just buying a cash flowing deal and giving them cash flow, there's a lot of option, but it's also very risky, because when you're buying a deal on a cash flowing basis, you're very tight on your debt service coverage ratio. You don't have upside. So we like to buy deals with a huge upside. So when we recover it, we have a huge margin in terms of debt service. So it makes the deal low risk.
Makes perfect sense. Thank you for sharing that.
Mm-hmm.
And the thing that kind of I'm curious about right
Mm-hmm.
now is where and how you're investing. Where are you finding these deals? Give us kind of the geographical location, the story behind that,
Yeah.
and then you already touched on the value add. It's definitely have huge upside. But give us kind of where you're finding those deals. Where are you mostly focused at?
Well, I mean, we are focused in Austin and San Antonio. I mean, it's very hard to find deals here or anywhere in the nationwide right now. Multifamily is super hot right now. There's so much of capital chasing these few deals, making a lot of people making mistakes because they're overpaying for it and hoping that it's going to appreciate. I mean, I never do that. I never buy and hope that it's going to go up, right? We always buy when there's a built-in upside on day one itself. So we are looking at Central Texas, which is Austin and San Antonio, and even in this area, it's super hard to find that kind of deal, right? So we are just, we work hard. At the same time, when you work hard, you become lucky too. So we do get this kind of deals And since we're able to move very quickly, brokers or even sellers bring deals to us, on a trust
Makes
basis.
sense. Makes perfect sense. And by the way, you can learn more about James at achieveinvestmentgroup.com, achieveinvestmentgroup.com. And I love the San Antonio market, and I also love the Austin market. I think it was HP, Tesla, Oracle, all announced the last 150 days they're all relocating their headquarters to Austin. It's such a on fire market. But I want to shift a little bit, and I want to discuss a little bit. Our show is focused on capital gains tax deferral. Lots of high net worth individuals selling businesses, primary homes, investment real estate, cryptocurrency, stock, and they're faced with this huge capital gains tax, and they're not sure how to defer it. We have a unique strategy called a deferred sales trust, which works for that. But I'm curious, on your side of things, what's the biggest frustration when it comes to capital gains tax deferral options or lack thereof?
I think it's just the options, right? I mean, what are the options right now? I mean, it's like for me. I mean, we have quite a good amount of depreciation, passive loss, stored, and we're able to take the capital gains, whatever capital gain comes in, right? But there are definitely options out there which I've not exercised a lot of it, but I know 1031 is there. The one you're talking about, DST, even though I'm not very familiar about it, but I know some things about it. It's available as well. But just even like 1031 is very, very time sensitive. So it sometimes makes you to make mistakes because you have 45 days. You have to identify 3 properties. You have to close within 6 months. Sometimes it's very high tendency to make mistakes, and I try not to do that, right? Because I don't want to make mistakes, right? So I rather pay the tax than do it, right? So
Yeah, we call it the shotgun wedding, right? You get engaged in 45 days and married in 180 days. And typically,
yeah.
if you're getting married fast, it's probably not a good idea. Now, I want to focus on the first thing you said when it comes to, I think you're referring to cost segregation, right? And the accelerating that, getting the bonus depreciation and using that to offset cap gains tax. The next step to that, though, is what happens when your depreciation goes to zero, right? If you've owned multifamily for 27 and a half years, right, your no depreciation's left. Or if you've done an accelerated pace and now it's even shorter than that pace, what do you do, right? Whereas the 1031, if you do that 1031, you can, as long as Biden keeps it in place. By the way, he's talking about taking it away. We'll see what happens there. You can defer it, but your depreciation schedule travels, right? So that's not good. So now all of a sudden you're like, oh no, I bought this big property and my depreciation traveled. I don't have as much or maybe any depreciation depending on what you bought it for. And so you may not even have the cost seg option to offset. Whereas the deferred sales trust, what's really unique, you can sell, defer the tax, go buy a property and get a brand new depreciation schedule. So I'm curious, James, what would a brand new depreciation schedule mean for your clients and your GP positions if you could do that on every deal?
Yeah, I think that'll be a really good option. I mean, I know about DSTs and availability, but I just never really come to a stage where we need to use that. But I think that'll be a really good strategy to defer that capital gain, into. I think the way it works is it goes to another syndication, but it's more of a DST form, right?
So you're close. You're close, James. So most people get it confused. You're referring to a Delaware statutory trust, right? Which is just another form of like owners, the big corporations that take up all the control. And this, we call it the old blockbuster way, right? Like you're like, why would I give it up to them with no value add? I lose all the control. I lose all the liquidity. And I've done Delaware statutory trusts with clients in the past, and of course 1031s. But then we figured out what this thing called a deferred sales trust. It's the Netflix way of doing things. You don't have to go with big syndicators. You can go in at any time that you want to. You get a brand new depreciation schedule. Whereas the Delaware is just a form of a 1031. You're just changing your 1031 Delawareing into that. So yeah, definitely some big differences. And for people who want to learn more about the deferred sales trust, you can go to capitalgainstaxsolutions.com. That being said, James, do you allow or have people come in via 1031 exchanges, or is that something most syndicators, they just don't, right? Because it's too complicated. But I'm curious if you've been able to figure that out.
Well, I'm able to figure it out, even though we have never done it. But I know how it works, right? You bring a few 1031 exchanges, you put it on a slightly higher level, more of a JV structure with the syndicator. But I know how it works. I have an attorney who does that as well. It's just until now, we never had an opportunity to do that, right? So, I mean, my last raise, there was someone who said, I have a big 1031, can I put it in? But by the time I figure it out, and I'm already done raising the money, right? So
that 45-day 180, right? Everyone's on these, unless the stars align perfectly, right?
Correct,
are
correct.
you able to do that? And that's exactly why the deferred sales trust is perfect, because you don't have to do that. That's enough of
Mhm.
that commercial there, but I just want to make sure our listeners understand that James and I are meeting for the first time, and this is a very common thing. He's super experienced and really
I
sharp
didn't
at what he
know.
does,
I didn't know it
but he
existed.
doesn't know about the deferred sales trust, and we could really help a lot of people together.
No, but they
Um,
shouldn't have named it a DST because it's very confusing with Delaware Statutory Trust, right?
You're right. You're right. They should rename it. It should be a Delaware 1031 is the way to think about it, and ours should
Yeah,
just be the
yeah,
regular DST, right? So
yeah.
different tax codes. One's IRC 453, the other one's IRC 1031. So different tax codes. But by the way, Biden might take it away. James, what are your
Mhm,
thoughts on the new Biden tax plan as it
mhm.
pertains to investment real estate and just high net worth individuals?
I'm not worried about anything that happens outside of my control because it's very hard for me to control anything outside of my control, right? So whatever happens, we're gonna just keep on buying deals, which I know, which we are gonna be buying. I know there's gonna be capital gain tax or something along that line. If it changes, it changes. We'll go ahead and pay the tax and we move on, right? So I like to focus on something that I can control. It's very difficult for me to say what can happen in the economy or what the new administration come and change. And it might change again in the next 4 years. So I don't want to crack my head for that.
100%. I couldn't agree with you more, James. I think it's the best way. I've just put my head in the sand, and when it comes to
Mhm.
a lot of the news, a lot of stuff that's going on, even prior to the whole election, I just what, I'm just going to keep trying to do what I can do to serve my family and my clients and my friends and friends. That being said, the COVID-19 has happened. Value add multifamily has remained resilient through this whole process for the most part, right? For
Mhm.
most of my clients in the strategic alliances across the U.S. So, what are you seeing there? What are your thoughts on just the state of multifamily investing, given COVID-19 and given 2021 now?
I think the multifamily price is going to keep on going up because there's going to be inflation happening and rents are going to go up. And just because of rents going up. I'm not sure whether the cap rate was compressed further, but with the rents going up, yeah, I mean, your valuation of multifamily is going to go up. However, having said that, there's like 10 to 15% of multifamily, which is in a distressed state right now for some reason, right, due to COVID or even before COVID. And that deals will flow through, and that are the deals that we will be looking for, right? So um, yeah, there is definitely distress in the market even now. At the same time, I think prices are just going to keep on going up, and it's just investors have to use creative methods to buy deals nowadays, right? Rather than just going to the market and getting on a bidding process.
Yeah, 100%. In 2008 crash, same thing, right? I think it's gonna be different than that. I don't think it's going to be a big of a crash. I think it's going to be a big correction, but I think it's going to be about on the debt piece, right? Where people got over leveraged on too many deals, and then having a GP or an owner come in and take over that debt position and renegotiate something along those lines. Because I don't quite know how that's going to shake out, but I do anticipate values and opportunities in the next 12, 24 months. By the way, in '08, it took to 2011 to see the bottom of the real estate market, right? So the crash happened then, but then
Mhm.
it took this much longer. So a lot to be, but that's interesting. A lot to be seen, but really interesting. You said 10 to 50% are distressed right now, to see how that actually shakes out. Any thoughts on what you might be able to take advantage of with that, or on
Yeah,
that?
yeah. I mean, similar to what we did in the last deal, right, where we buy deals who need to be sold on an assumption basis because they are penalty, and if you can get it at the right basis, we'll go after that kind of deals. And having said that, I don't think so. Real estate price will crash. I think it's just going to keep on going up just because the interest rate is so low, and real estate is the one area where because of interest rate is so low, people are continuing to buy real estate, and I think it's going to really help boom the economy. Real estate is going to be really booming the economy because that's hard assets and something tangible, and interest rates low, and Fed is keep on buying all kind of bonds, right, to help bond prices, right, which is a lot of it's backed by real estate as well. So I think it's not going to crash, but there's going to be, like as I said, 10 to 15% of deals is going to come out soon, and depend on how it comes out and how it's being marketed, it can be priced very high or it can be priced very low as well. And the good operators and people who knows how to close quickly, able to raise money quickly and close confidently, and able to have the stomach to buy this kind of deal will be the winners.
Absolutely, James. Couldn't speak higher enough and agree with you more on that. But when I came from Marcus and Millichap, by the way, I really appreciate that you have a CCIM designation, right? And that
Yep,
training and that underwriting. At Marcus and Millichap, we felt like we got a lot of that high level of underwriting and understanding the marketplace and being specialists. And that's why you want to connect and find out where some more opportunities at achieveinvestmentgroup.com with James. That being said, are you ready for the lightning round?
absolutely. Let's do it.
Let me see if we got you here. Knowing what you know now, if you could go back to your 25-year-old self, James, what's the one golden nugget you would make sure you tell yourself?
Think big. At 20 years old, yeah, I mean, because when you're a corporate employee, and I was already working when I was 20, sometimes you're just focusing on work, and you're just looking at your career ladder on your W-2 employment. You don't really mix with other people, like business people, to find out what's out there, right? And sometimes you have to think big, beyond than what your W-2 employment is giving you the opportunity, right? So think big and think differently from everyone else from your network.
Beautiful. What's the biggest challenge you're currently facing?
Biggest challenge is COVID-19. I mean, I know multifamily is still resilient, but our delinquency is slightly higher than normal. And working with residents, working with government, organization to get assistance has been a challenge. It just takes so much of our time because now we have to focus a lot on collections. And since we are a vertically integrated company, we control the whole pipeline, so we have a lot more control on our investment. But it also takes up a lot of our time, yeah, that's the biggest challenge right now.
What mistakes do you see other maybe less experienced commercial real estate syndicators make right now?
Just buying a deal for the sake of buying a deal. I mean, buying a deal is just a sprint, right? But operating a deal is the marathon, right? So it's a lot of times they don't really learn the marathon side of it. But I mean, it's easy to find capital nowadays to buy a deal, right? So anybody can buy a deal, but whether you are able to operate the deal, able to return money to investors, able to create cash flow and improve operational efficiency, able to really operate the deal during a downturn, right? Operating a deal during an upturn was super easy, right? Because the market wins is behind your back. But when during a downturn is where it tests the sponsor, the operator's knowledge and skill on how they are going to manage that investment for their investors.
Yeah, you got it. Warren Buffett says it well. When the tide goes out, you see who's been skinny dipping, right? And you don't want to be caught skinny dipping when this market
A
kind of
lot of
shifts.
people are skinny dipping right now.
Yeah, right. Yeah, I know. It seems like it kind of keeps going. It's really interesting.
Yeah. Yeah.
Um, what are you curious about right now?
Why do I care?
What are you curious about right now?
Oh, what I'm curious. So I'm curious on how does the whole stimulus money that has been printed, how is going to impact the economy in the future, right? So, and the Fed has come up with this new methodology for some reason in the past, maybe 3 to 5 years, where they're able to control the inflation. I mean, the inflation in some way, right? Without I mean, with quantitative easing, quantitative tightening, they're able to control the economy. I'm just curious on how long it's gonna go, in what way, right? I'm interested to see how Fed is gonna control the economy moving forward.
Excellent. Last question. After all your success and all the clients, friends, and family that you've helped create and preserve wealth in real estate, how do you stay centered, James, in your values? And how do you stay encouraged to reach for new goals?
We have much bigger goals in life other than our own goals. So we have our own 501c3 foundation, which we are in a mission of educating a lot of kids, often kids in third world countries. So we have like 330 kids right now that we are sponsoring on a monthly basis for the education, and we have much larger goal in the coming 10 to 20 years. So that's our unit count, I would say, right? Number of unit count. So right now 330 kids or 330 units, I would say. So even though I have 2,000 units, but we focus a lot on giving back and making a difference in the world.
Absolutely amazing. James, I want to thank you for being on the show. For our listeners who want to get in touch with you, would you give them one more reminder of where they can find you?
Achieve Investment Group, ACHIEVE, it's like achieving a goal, achieveinvestmentgroup.com. And you can come and click on, there's an Invest With Us link there. And you can get my book. It's called Passive Investing in Commercial Real Estate, if you can see on the camera. It's top 15 book by Jim Cramer, The Street. I sold like 2,000 copies. paid copies, paid full price copies. It's not 99 cents or given free. Right? That's really a lot more, right? So you can go get my book for free at passiveinvestinginrealestate.com. I repeat, passiveinvestinginrealestate.com. So I'm offering that to your audience. There's a small shipment for $4 something, but everything else is free. The same book is $20 on Amazon. That's 85-star reviews. But I would encourage you guys go and read it. Even though you have invested 50,000 or you invested 5 million in passive investing, read that book. There's a reason why I sold like 2,000 copies of that, and people get really good reviews because there's so much of details in passive investing, especially in a private syndication, that people don't talk about it. So this book, I open up a good amount of knowledge on what happens behind the scene, because it's called the insider secrets to achieving financial independence. So you guys definitely should go and check out that book.
James, thanks so much for being on the show. So appreciate you. Make sure, listeners, you take advantage of that. We can always still grow and learn something new, even for the experienced old dog in commercial real estate and investing. Hey, for our listeners, I want to thank you again for listening to another episode of the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. And using a proven tax deferral strategy, such as the deferred sales trust, is the best way for you to exit your business or real estate or other highly appreciated asset, or getting with someone like James to invest in multifamily value add in places like San Antonio or Austin, Texas, is an amazing way for you to create and preserve your wealth. Please go to capitalgainstaxsolutions.com if you want to learn more about that, or experttaxsecrets.com if you want to learn how to use the deferred sales trust to grow your business. Thanks, everybody. Until next time.